Good day everyone, welcome to ACT132, the Government Accounting and for Non-Profit Organization. So before anything else, allow me to introduce myself. My name is Jamil Makabuttas and I am your first reporter for today. So for today's video lectures, I and together with my group mates we will going to tackle about the financial assets. So let's start. But before we proceed to our topic, we must consider first our learning objectives. So after these video lectures, we must be able to define a financial assets, and also we are able to give examples. Another one is we are able to account for cash and cash equivalents, also for receivables and for investments, of course. So let's start. So for today's topic, the financial assets, yung approach natin dito, the recognitions and the measurements dito sa government accounting is almost similar doon sa napag-aralan natin during our financial accounting. The only difference is that the account titles. So first off, we have here the definition of a financial instrument. So we have here instrument is any contract that gives rise to both a financial asset of one entity and a financial liability or equity instrument of another entity. So that is according to PPSAS 28 paragraph 9. So we have here the three characteristics of a financial instrument. Okay, first, there must be a contract. All right. Second, there must be two parties. Of course, meron contract dito dapat. And of course, kailangan merong dalawang parties na involved sa contract na ito. And third, this contract must give rise to both financial assets of one entity and a financial liability or equity instrument of another entity. All right, let's have the definition of a financial asset. So ano nga ba itong financial asset? So we have here, financial asset is any asset, any asset, but must qualify in any of these items. Itong from A to E. So first, it must be cash. So ang example natin dyan ay cash and cash equivalent, of course. Next, it must be an equity instrument of another entity. So your asset is a financial asset if it gives rise to the financial liability or equity instrument of another party. So ang example natin dyan ay equity and debt instrument. So we have, for example, the investment in associate, investment in subsidiaries. So, yan ang example natin sa equity instrument. Next asset is, it must be a contractual right to receive cash or another financial asset from another entity. So, ang example natin dyan ay, of course, accounts receivable, notes receivable, loans receivable, receivable from government-owned corporation or GOCC, from LGU, and receivable others. Another example is, another item is that it must be a contractual right to exchange financial instruments with another entity under conditions that are potentially favorable, or a contract that will may be settled in entity's own instrument. So, ang example natin dito sa letter D is the derivatives. Now, kailan daw natin i-recognize ang financial asset? So, a financial asset is recognized when an entity becomes a party to the contractual provisions of the instrument. Now that we know when to recognize a financial asset, let's proceed on how we measure this financial asset. So we have here, financial assets are initially measured at fair value plus transaction cost. So ano nga ba itong transaction cost? These are the costs that are directly attributable to the acquisition, issuance, or disposal of a financial instrument. Okay. So in other words, these are the costs that are capitalizable to the financial asset, or dinadagdag natin sa cost ng isang financial asset. But hindi lahat ng financial asset ay kinakapitalize natin yung corresponding transaction cost nito. Meron tayong exception. So ano nga ba itong exception? Ito ang mga financial asset that are measured at fair value through surplus or deficit, whose transaction costs are expensed outright. Meaning, itong fair value through surplus or deficit, yung transaction cost natin dito is ini-expense natin or hindi natin siya ina-add sa cost ng financial asset. So, itong fair value through surplus or deficit ay mas kilala as fair value through profit or loss kung nasa context tayo ng mga private entities. So we have here the summary of the recognition of a financial asset. So we have two classes of financial asset here. So we have the financial asset at fair value through surplus or deficit, and financial asset not at fair value through surplus or deficit. So, makikita natin yung difference ng initial recognition nito. Ang initial recognition nitong first, fair value through surplus or deficit is at fair value only. Okay. Ang initial recognition naman ng financial asset not at fair value through surplus or deficit are the fair value plus transaction cost that are directly attributable to the acquisition, issue, or disposal of a financial asset. Okay? So as for the transaction cost, in-expense natin siya under fair value through surplus or deficit. Whereas the financial asset not at fair value through surplus or deficit is ini-include natin siya sa cost ng financial asset. Now, let's take an example. So, if the financial asset is measured at fair value through surplus or deficit, and the transaction costs are then the transaction costs are expensed outright. So, in the example below, we assume that there is 10,000 transaction cost. So, paano natin siya i-journalize? So, we have here the first journal entry. We have debit assets held for trading and credit, cash and back, local currency, BSP. So this journal entry is to recognize the acquired financial asset held for trading. So meaning kung held for trading siya, meaning financial asset siya through surplus or deficit. So we have debit 500 and also a credit of 500. So next journal entry is to show us the how the transaction costs are recognized. So we have here debit to other financial charges and credit cash and bank local currency BSP 10,000. So as we can see here, nag-debit tayo ng isang expense account because ang treatment natin sa transaction cost under fair value through surplus or deficit are, of course, expensed outright. Now, let's take another case. So, for example, yung financial asset natin kanina, sa example natin kanina, is measured not at fair value through surplus or deficit. Meaning, hindi siya, yung transaction natin, ang treatment natin sa transaction cost na ito is capitalized. So, paano natin malalaman na capitalize si transaction cost? So we have here investment in treasury bonds, foreign, all right, and credit to cash in bank local currency BSP. So as we can see here, ang amount na dinebit and credit natin dito is 510,000 pesos. That is composed of 500,000 for the financial asset and 10,000 for the transaction cost. So, ganyan lang po kasimple yung ating pag-recognize and pag-measure ng isang financial asset.
So Assalamualaikum guys and good day. I am Muhammad Isam Gandum Raale and I am the second reporter from this group. At yung part ko po is to discuss some parts of cash and cash equivalents under financial assets. So without further ado, allow me to start. So cash and cash equivalents. Before we start, let us talk about cash, or let us review rather kung ano ang cash, because at this point I'm sure all of us know kung ano ang cash. Pero let me explain regardless. So cash is, in layman's term, cash simply means money, and money is the standard medium of exchange in business transactions. Money refers to the currency, yung mga coins which are in circulation and legal tender. Pero under accounting, yung cash of course has a broader meaning. Meaning, it refers to more than just money. As you can see, cash comprises of cash on hand, at cash in bank, at cash treasury accounts, and etc. So ngayon na-explain na natin, na-review na natin kung anong cash. Let us move on sa actual topic na pag-uusapan natin dito sa chapter na ito under cash and cash equivalents, which is yung adjustments for unreleased checks, yung accounting sa mga canceled checks, yung mga petty cash fund, at yung accounting for cash shortage or overage. Let us talk about adjustment for unreleased commercial checks. Ano itong unreleased commercial checks? These are the checks drawn but not yet given to the payees as of the end of the period. Simply put, ito yung mga checks na withdraw natin sa bank, na ibibigay natin sa payees natin, ibabayad natin sa payees natin, pero hindi natin sa kanila pa na ibibigay yung mga checks na ito sa kanila as of the end of the period. Kaya kailangan natin ng adjustment para ma-reflect of course sa FS as of the end of the period na yung check na mga ito is nasa possession pa natin. Para ma-achieve na ito, we simply revert them back to cash. At yung adjusting entry para dito is simply debit, cash in bank, local currency, dash current, then credit accounts payable or other liability account. Para of course may balik natin yung accounts payable natin at yung cash in bank natin. Pero take note guys, although sinabi ko na yung adjustment para dito sa unreleased checks is i-revert natin siya sa cash, yung unreleased checks are not actually physically canceled. Meaning, hindi natin sila actually binabalik sa bangko. Nasa position pa natin sila. Kasi yung purpose lang ng adjustment entry na ito, yung pag-revert natin sa check sa cash in bank, is para lang ma-reflect of course sa FS na nasa possession pa natin yung check at hindi pa natin naibibigay sa mga pays. Hindi natin actually physically binabalik yung check sa bangko. At before moving on sa next topic, mayroon pa akong isang note dito na itong procedure na ito does not apply to the cash MDS account or simply yung cash modified disbursement system account because there is no actual cash with the government servicing bank. Kasi yung mga unused NCA is reverted back to the national government. At therefore, yung balance natin sa cash MDS account is nasi-zero out siya at the end of each period. So let us talk about accounting for canceled checks. So ano naman itong canceled checks? Yung canceled checks refers to the checks that are canceled when they become stale, voided, or spoiled from the name itself. At yung check is makukonsider natin as stale if it has been outstanding or simply put, hindi na in cash ni payee for over 6 months from its date. So usually guys, pag si payee nakaka-receive ng check mula kay payor, yung reason of course is para sa payment ni payor sa obligation niya kay payee. So pag yung check na na-receive ni payee mula kay payor is na-cancel, mangyayari, makukonsider natin na yung obligation ni payor kay payee is hindi siya actually na-settle kasi hindi siya na-encash ni payee on time. Kaya mangyayari yung cancel checks ay dapat ma-revert siya back to cash. So as you can see below, the cancel check pertains to sa dalawa na ito, sa current year at para sa prior period. Sa current year, yung entry is cash das modified disbursement system MDS, regular, then credit, accounts payable. Yung reason ng entry na ito is of course para ma-recognize natin yung cancellation ng canceled MDS checks natin. Dito sa prior period, yung entry is accumulated surplus or deficit, then credit accounts payable. Yung purpose of course nito is para ma-recognize natin yung cancellation ng mga stale or voided or spoiled MDS checks natin sa prior year. So again, itong entry na ito is again para sa prior period MDS checks natin. Yung debit is accumulated surplus or deficit kasi yung reason of course is alam na natin na yung cash das modified disbursement system account is na-zeroed out siya at the end of each period. Pero pag in the end, itong cancel check na ito is napalitan ng tinatawag natin na replacement check, which is yung check na pinapalit natin sa cancel check after masubmit sila sa accounting unit, yung entry natin is magiging debit accounts payable din credit cash kasi napalitan din naman yung cancel check ng replacement check. So let us talk about petty cash fund. So review guys, yung petty cash fund refers to the amount granted to duly designated petty cash fund custodian for payment of authorized petty or miscellaneous expenses which cannot be conveniently paid through checks or ADA. So simply put guys, yung petty cash fund is for the convenience of the entity. Sa pangbayad ng mga petty expenses, yung mga not so important expenses, ginagamit nila yung mga petty cash fund para hindi naman nila kailangan mag-withdraw ng checks all the time pag may kailangan nila mag-incur ng petty expenses o mga not so important na mga expenses. So moving on, yung petty cash fund of a government entity is, as you can see below, ito yung mga guidelines natin regarding the petty cash fund of a government entity. Yung first dito is, yung petty cash fund of a government entity is maintained using the imprest system. Unlike doon sa business entity, in contrast sa business entity, pwede siya either maging imprest system or fluctuating fund system. Pag sa petty cash fund ng isang government entity, kailangan talaga shall be using the imprest system. So next, the petty cash fund of a government entity is sufficient to defray recurring petty expenses for 1 month. So kailangan daw yung petty cash fund of a government entity maging enough daw siya para pangbayad na ma-incur natin na mga petty expenses for 1 month. Pangatlo is, ginagamit ito for disbursements not exceeding 15,000 pesos per transaction. Kasi pag mag-exceed na dyan, hindi na yan considered na petty expenses. So bakit pa natin ibabawas sa petty cash fund? Then pang-apat, canvass at least 3 suppliers for purchases amounting to 1,000 pesos and above. Pero of course except for purchases made while on official travel. Then next, yung petty cash fund of a government entity is replenished as soon as disbursements reach at least 75% or as needed. Then lastly, yung petty cash fund is tinatanggal natin, gi-close natin only upon the termination, separation, retirement, or dismissal of the PCF custodian. So next, so we are now in the last part sa part ko dito sa chapter na ito, which is accounting for cash shortage or overage. So accordingly, dito sa cash shortage or overage, yung isang disbursing officer is liable for any cash shortage. So ano pala itong cash shortage? So simply put, literally talaga minimin dito is pag nagkulang yung pera. Yung reason kung bakit siya magiging liable kasi meron tayong relevant provision in the law. Accordingly dito sa law, the failure of a public officer to have duly forthcoming any public funds or property with which he is chargeable upon demand by any duly authorized officer shall be prima facie evidence that he has put such missing funds or property to personal use. So simply put guys, in short, pag kulang yung pera, pwede natin i-assume na itong disbursing officer na ito is ginamit niya yung missing funds, yung kulang na pera for his own personal use. Kaya, yun yung reason kung bakit siya magiging liable. While pag mayroon tayong tinatawag na cash overage, or simply put, pag sumobra yung pera, ma-forfeit daw siya in favor of the government. Meaning, ibibigay siya sa government. Pag, of course, hindi niya ma-explain satisfactorily to the auditor kung bakit sumobra yung pera. And as you can see below, ito yung mga entries para dito sa mga cash shortage or overage. Para sa cash shortage, yung entry to recognize the cash shortage of the disbursing officer, yung entry is debit due from officers and employees, then credit advances for or to the appropriate account. Then sa overage, yung debit natin para ma-recognize yung forfeiture of the cash overage of the disbursing officer to the government, i-debit natin cash, das, collecting officer, then credit miscellaneous income ng government. So I guess yun lang ang part ko. So thank you for listening. Hopefully makikinig tayo sa next na reporter. So that is all, and thank you.
At this point of time, let's proceed to the discussion about the dishonored checks. Now, ano nga ba itong mga dishonored checks? These are checks na hindi tinanggap when presented for payment. Example given dito ay yung mga checks na binalik ni bangko because of lack of sufficient funds o yung tinatawag natin na bounce check. We need also to keep in mind na yung drawer of the dishonored check is liable doon sa amount ng check and all penalties na nagresulta because of the dishonor without prejudice doon sa criminal liability for a bounced check. Now, for its entries, dishonored checks are recorded to the other receivables account. And for the collections remitted to BTR, ito yung entry natin under current year, debit other receivables and credit cash treasury or agency deposit regular. This is to recognize yung cancellation of current year's deposited collections due to dishonored checks. And under naman sa prior year, we need to debit other receivables and credit yung ating accumulated surplus or deficit. And this is to recognize yung cancellation of prior year's deposited collections na due to dishonored checks. Now, moreover, for the collection remitted naman sa authorized government depository bank, under the current year, we need to debit other receivables and credit cash in bank local currency current account. And under naman sa prior year, we need to debit the other receivables account and credit the cash in bank local currency current account. Now, here are the guidelines for the dishonored checks. First in line, when a check is dishonored, the collecting officer shall, number 1, kailangan niyang mag-issue ng notice of dishonored checks doon sa drawer and any endorser. And then second is cancel the related OR. Next in line, if the collecting officer nag-fail siya to issue the notice, then the dishonored check becomes his personal liability. So si drawer and any endorser na hindi nabigyan ng notice will be relieved from any liability. Next one, a check refused by the drawee bank when presented within 90 days from its date is a prima facie evidence na si drawer ay merong kaalaman about the insufficiency of his funds unless the drawer pays the check in full or makes arrangement with the drawee bank for the full payment nung check na yon within 5 banking days after ma-receive yung notice of dishonor. And then lastly, a dishonored check shall be settled by payment in cash or certified check. Yung dishonored check shall not be returned sa payer unless maibalik niya yung previous OR. Now, let's proceed to bank reconciliation. Under bank reconciliation, one of the important things that we need to know ay yung bank reconciliation statement. Now, ano nga ba itong statement na ito? This is basically a report na pine-prepare for the purpose of bringing the balances of cash per records and cash per bank statement into agreement. Basically, itong bank statement na ito is issued by the bank na nagpapakita ng credits and debits to the depositor's account during a period as well as the account's cumulative balance. Now, here are the guidelines under bank reconciliations. First in line, bank reconciliations shall be prepared as internal control para masigurado natin yung correctness of cash records and as deterrent to fraud. Second, yung ating chief accountant or designated staff ay kailangang mag-prepare ng separate bank reconciliations sa bawat bank account na mini-maintain ng entity within 10 days from receipt ng kanilang monthly bank statement. Third one, the adjusted balance method shall be used. Under this method, yung ating unadjusted book and back balances are brought to an adjusted balance that is reported sa ating statement of financial position. Next one, bank reconciliations shall be prepared in 4 copies, 4, to be submitted within 20 days from the receipt of bank statements to the following. First, sa COA auditor. Second, the head of agency. Third, accounting division and bank kung kinakailangan. And then lastly, a journal entry voucher or JEV shall be prepared to record any reconciling items. At this point of time, let's discuss what are cash equivalents. Now, these cash equivalents are short-term, highly liquid investments na readily convertible na to known amounts of cash and which are subject to an insignificant risk of changes in value. Now, we need to keep in mind na ang magko-qualify lang as cash equivalents are only debt instruments na na-acquire within 3 months before their scheduled maturity date. Hi, good day ladies and gentlemen. I am Dato Israel T. Kamandan, and to continue with our report, I am assigned to discuss about the receivables under our main topic, which is all about the financial assets. Now, as you can see, itong receivables na ito, very familiar because we have already encountered this a lot of times sa ating mga previous subjects, especially sa ating intermediate accounting. Now, ang approach natin ay halos same lang dito sa government accounting. Now, let's proceed to the topic. Now, to make things crystal clear, let's define ano nga ba yung receivables. Now, basically, itong receivables na tinatawag natin ay nagre-represent doon sa mga claims for cash or other assets na galing sa ibang entities. Again, this represents yung ating claim for cash and other assets na galing sa ibang entity. Now, for the measurement, paano ba natin mini-measure itong receivables? Now, these receivables are actually initially measured sa kanilang fair value plus yung kanilang transaction cost. And then subsequently, mini-measure naman natin sila at amortized cost. Again, the measurement for the receivables are initially at fair value plus yung kanilang transaction cost and subsequently measured at amortized cost. Next in line, we have the notes receivable. Now, itong notes receivable, this simply represents yung ating claims na usually may kasamang interest for which meron tayong formal instrument of credit na ini-issue bilang ebidensya ng ating utang. And ang pinaka-example nito is yung mga promissory notes. For our next example, we have the loans receivable. Now, in the context of government accounting, itong loans receivable na ito ay ginagamit in BTR-NG books para makapag-recognize ng loans extended by the national government sa mga government financial institutions or GFIs or GOCCs, and take note that these are covered by loan agreements. And for our last example, we have other receivables. Now, under this other receivables, we have the interest receivables due from employees, officers, other NGAs. Also, we have the lease receivables, the dividends receivables, and the like. Now, if you want to go further about these accounts, you can check the GUM for NGAs Volume 3.
Assalamualaikum, I am Raja Mujaid. So we will continue our discussion on categories of financial assets. Categories of financial assets. So there are four types of financial assets. The first one that we will discuss is the financial asset at fair value through surplus or deficit. So in the financial asset are measured at fair value through surplus or deficit if they are not held within a management model whose objective is to hold assets to collect contractual cash flows, or within a management model whose objective is to achieve by both collecting contractual cash flows and selling financial assets. So this financial asset is initially measured at fair value, as I've said. And in addition, on an entity may at initial recognition irrevocably designate a financial asset as measured at fair value through surplus or deficit. If doing so, it eliminates or it significantly reduces a measurement or recognition inconsistency, sometimes referred to as a accounting mismatch. So that recognition inconsistency that would otherwise arise from measuring assets or liabilities or recognizing the gains and losses on them on different bases. So an entity may also make an irrevocable election at initial recognition for particular investment in equity instruments that would otherwise be measured at fair value through surplus or deficit, to present subsequent changes in fair value in net assets or equity. So that's the subsequent measurement of the financial assets at fair value through surplus or deficit. So let's move on to the second type of financial asset, which is the held to maturity. So this financial asset is measured at initially measured at fair value plus transaction cost, and also measured at amortized cost using the effective interest method. So we know held to maturity securities are purchased to be owned until maturity. For example, a company's management might invest in a bond that they plan to hold to maturity. So they are unlike trading securities or available for sale securities, where companies don't usually hold on to securities until they reach maturity. So companies mostly use held to maturity to protect themselves against interest rate fluctuations, diversify their investment portfolios, and realize a small low risk capital gain over a longer period of time. The third type of financial asset is the loans and receivables. So same with the held to maturity, this financial asset is initially measured at fair value plus transaction cost, and also same with the um, subsequent measurement, which is measured at amortized cost using the effective interest method and taking account of any discounts or premium obtained at the time of the acquisition, so that they can be recognized over the entire period until their maturity. So the example of these financial assets is the accounts, notes, or loans receivable. So the last one, the last type of financial asset is the available for sale. So this type of financial asset are the default categorization of securities that companies decide to invest in for the purposes of benefiting their financial position. Unlike trading securities, available for sale securities are not bought or sold for the sole purpose of realizing a short-term capital gain. So they may be purchased as tools to diversify away some of the risk that a company's investment portfolio currently carries. For example, a company may choose to invest into industries that exhibit negatively correlated returns or invest in lower uh, securities in order to hedge against investment risk.
Assalamualaikum, and my name is Narudin Piguro, and the topics that are assigned to me are impairment of financial assets and the recognition of financial asset. So ano yung impairment? So yung impairment, if nare-remember niyo sa FAR natin, is yung loss na ma-acquire natin because of damages doon sa isang financial asset. So magkaka-acquire tayo ng impairment loss if yung carrying amount ng asset na yun is higher than its recoverable amount. So, impairment of financial asset, so an entity shall assess at the end of each reporting period whether there is any objective evidence that a financial asset or group of financial asset is impaired. So, kailangan is yung entity is i-check nila yung meron silang reporting period or i-check nila whether yung isang financial asset is impaired or damaged na pwedeng magka-cause ng deduction doon sa carrying amount niya. So if any such evidence exists, the entity shall measure that amount of loss is as the difference between the carrying amount of the asset and the present value of estimated future cash flow discounted at the financial asset's original effective interest rate, or in simpler terms, yung recoverable amount niya. So, kagaya ng sinabi ko, if yung carrying amount is higher than its recoverable amount, then magkakaroon tayo ng impairment doon sa financial asset, impairment loss doon sa financial asset. So, the carrying amount of the asset shall be reduced either directly or through use of an allowance account. So, the amount of the loss shall be recognized in surplus or deficit. So, yung other terms for that in business accounting is recognized in profit or loss. So, if you remember, doon sa impairment natin in FA1 is yung treatment in impairment of financial asset dito sa government accounting is just the same as doon sa business accounting. Meron nga lang konting pagkakaiba in case of accounts receivable. So, the allowance for impairment shall be provided in an amount based on collectibility of receivable balances and evaluation of such factors as aging of accounts, collection experiences of the agency, expected loss experiences, and identified doubtful accounts. So, yung GAG4 and GAS na is nag-provide sila ng example ng impairment of financial asset in case of accounts receivable. So, example 1, yung impairment of accounts receivable. So, the entries is debit, impairment loss, loans and receivable, and then credit, allowance for impairment accounts receivable, and this is to recognize impairment loss on accounts receivable. And example 2, impairment of loans from LGU or local government unit receivables, and that entries are debit, impairment loss, loans and receivable, and then credit, allowance for impairment na applicable account for loans receivable of LGU or local government unit. So this is to recognize impairment loss on loans receivable. So let us now go to the recognition of financial assets. So the recognition is the process of removing a previously recognized financial asset, liability, or equity from the statement of financial position. So yung na-recognize na financial asset, liability, or equity from the statement of financial position is i-remove natin. Yun yung de-recognition. An entity shall de-recognize a financial asset when and only when, as provided by GAM for NGAS. First, there are two conditions. First, the contractual rights to the cash flows from the financial assets is nag-expire or waived. And then second is the entity transfers the financial assets provided the following condition, which is divided into two. The entity transfers substantially all the risks and rewards of ownership of the financial asset, and the entity has not retained control over the financial assets. So the GAM for NGAS provided an example of the recognition of financial assets in government accounting. So the example is, a local government unit paid its outstanding loan balance amounting to 1 million pesos to a national government agency. The NGA, upon receipt of the payment from the LGU, will recognize its receivable account from said entity because its contractual right to the cash flows from the financial asset expire. So this type of receivable is a loans receivable. And from the sentence na contractual rights to the cash flows from the financial asset expire is pumasok na doon sa condition, whereas pwedeng tayong mag-recognize ng financial assets. But wait, take note that you can only recognize a financial assets in government accounting if COA approved it. So kailangan pa natin ng approval ng COA kahit na pumasok yung isang condition is kailangan natin hintayin yung approval ng COA para maka-recognize tayo ng isang asset. Now let's move to the entries. The entries for collection before the recognition is debit, cash in bank, local currency, current account, 1 million, and then credit, loans receivable, LGU, 1 million. So ito yung na-collect natin na receipt before yung derecognition. And to derecognize this, because of the contractual rights to the cash flows from the financial asset expire, to derecognize this is debit, allowance for impairment, loans receivable, LGU, and then credit, loans receivable, LGU.
Assalamualaikum and good day. I am Arjuman Dukol and I will be discussing derivatives. So, what is a derivative? So, a derivative is a financial instrument or other contract that derives its value from the changes in value of some other underlying asset or other instrument. So, its value changes in relation to changes in a variable. Variables such as an interest rate, commodity price, credit rating, or foreign exchange rate. So, a derivative is set between two or more parties that can trade on an exchange or over the counter. These contracts can be used to trade any number of assets and carry their own risk. So, the prices for derivatives derive from fluctuations in the underlying asset. These financial securities are commonly used to access certain markets and may be traded to hedge against risk. So when it is first acquired, um, a derivative instrument is initially recognized in the balance sheet as an asset or liability at its fair value. So an example, the most common example of derivative instrument are forwards and futures. So a forward contract is a customized contract between two parties where settlement takes place on a specific date in future at a price agreed today, while futures are exchange traded contracts to sell or buy financial instrument or physical commodities for a future delivery at an agreed price. So next, let's move on to the characteristics of a derivative. Number one, its value changes in response to the change in an underlying. Second, it requires no initial net investment or only a very minimal initial net investment, and it is settled at a future date. So the very purpose of derivatives is risk management. So risk management is the process of identifying the desired level of risk, identifying the actual level of risk, and altering the latter to equal the former. So derivatives can be a very convenient way to achieve financial goals. For example, a company that wants to hedge against its exposure to commodities can do so by buying or selling energy derivatives such as crude oil futures. Similarly, a company could hedge its currency risk by purchasing currency forward contracts. So derivatives can help investors leverage their positions such as by buying equities through stock options rather than shares.
So let's now proceed to hedging. Hedging is a method of offsetting a potential financial loss or the structuring of a transaction to reduce risk involving financial instruments. So here, in accounting, hedging recognizes the offsetting effects on surplus or deficit of changes in the fair values of the hedging instrument and the hedged item. So in hedging, meron tayong three relationships dito. First is we have fair value hedge. Second, we have cash flow hedge. And the third is the hedge of a net investment in a foreign operation. Fair value hedge. It is a hedge of the exposure to changes in fair value of a recognized asset or liability or an unrecognized firm commitment or unidentified portion of such an asset, liability, or firm commitment that is attributable to a particular risk and could affect surplus or deficit. So dito sa fair value hedge, isa itong hedge where it is exposed sa isang matawag natin siyang fair value hedge if it is exposed to changes in fair value ng isang recognized asset or liability. Or pwede rin sa unrecognized firm commitment or sa identified portion of such an asset, liability, or firm commitment where it is attributable sa isang particular risk that could affect surplus or deficit. Sa cash flow hedge naman, isa itong hedge where it is exposed to a variability in cash flows, meaning it could affect only in cash flows where it is attributable to a particular risk associated with a recognized asset or liability, such as all or some future interest payments on variable rate debt or a highly probable forecast transaction. And second, it could affect surplus or deficit. Lastly, we have a component of a hedging relationship. So dito meron tayong dalawang components. First is hedging instrument and second is the hedge item. hedging instrument is a designated derivative or a designated non-derivative financial asset or non-derivative financial liability whose fair value or cash flows are expected to offset in the changes in the fair value or cash flows of designated hedged item. Meaning, ang hedging instrument is a designated derivative. Pwede siyang maging designated derivative or designated non-derivative financial asset. Or pwede rin siyang maging non-derivative financial liability where yung fair value or cash flows is expected to offset sa changes in the fair value or cash flows. Hedge item naman is an asset, liability, or firm commitment highly probable forecast transaction or net investment in a foreign operation. Meaning yung hedge item is isa itong pwede siyang maging asset, liability, firm commitment, or pwede ring maging highly probable forecast transaction or net investment in a foreign operation. So, ngunit matatawag natin siyang hedge item if it is exposed, if ang entity is exposed sa risk of changes in fair value or future cash flows. And it is second, it is designated as being hedged.
So I guess that would be all for our video lectures. And again, this is Jermaine Makabutas, and on behalf of my group mates, we thank you for listening, and we hope that you have learned something from our report. Thank you.